we've had the raising of the US Fed interest rates, the highest rates over since many, many years. And gold has typically been an inverse relationship to that, but gold has held up very well over the last year.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a Tuesday afternoon, and excited today because obviously we dig into the silver space quite a bit here on the show, although today have an expert on the gold side, who is Shane Williams of West Red Lake Gold, and has certainly quite an impressive background, which I'll let him touch on in just a moment. And obviously a lot going on in the gold circuit as well. At the Fed meeting last week, and leaving gold slightly below $2,000 as we record today on August 1st. So great to have you in here today, Shane. It's a pleasure to finally catch up and meet you. I know we've been planning this for a while, and welcome on in. How are you today, my friend?
I'm good. Thank you very much for having me on, Chris. It's great to be on. So good. I'm good. And gold, as you say, moving towards 2000, so it's an exciting time to be in the gold space and bringing a new company forward.
Yeah, and we will certainly touch on that, because interesting to me how gold has hung in there despite everything that's happened in the past year or so since we hit the bottom of the cycle. But before we get into gold specifically, perhaps you could just touch on your background a bit. I think it'd be helpful for people to know some of the experience you have in mining, because obviously we'll be digging into that a bit today as well. And perhaps you could touch on some of the experience you have.
Yeah, so prior to taking on the role at West Red Lake, my recent experiences with a company called Skeena Resources. Many of your viewers and listeners might know the Skeena, which is the old SK Creek project from Barrick. So I spent 4 years as the COO for Skeena Resources, really from the early stages of that company, managing to do the deal with Barrick and taking that project forward all the way from an early stage exploration to a large developer company, really over the last 4 or 5 years. So my background is really on moving projects forward and getting them into operation. Prior to that, I was with a company called Eldorado Gold, who many of you know, a major mining company. I spent 8 years with Eldorado Gold, working around the world, building and operating their mines. I spent some time in Turkey. They have 2 big operations in Turkey. I moved across to Greece, where I built their Skouries project, which is a big project they're working on at the moment. I practically built that, put that ready to go. And then I worked from there. I moved across to their Canadian operation and was involved in doing the due diligence, the purchase, the acquisition of the Lamaque project, which many of your listeners will know from who was originally with Integra. And we did the deal. There was an early stage study on that, some exploration, and we took that into production in an 18 to 2 year period. So it was a really fast track sort of into production phase of project. And that today is operating in Eldorado's portfolio, and it's their best operating company to date. So we really put in a good team in place to run that operation. It's been very successful. So that's really my background, operating and developing projects last number of years. So.
Well, it's pretty impressive what you've done, and certainly a lot of experience. And I'm sure you've checked the gold price chart a time or two in between all of that. And again, we're recording on Tuesday, August 1st. A little bit of a difficult day for gold and silver prices, down quite a bit. Here we see the futures down $27. Although, Shane, it's been an interesting year. We're coming up just about 11 months now, so close to a year since gold and silver prices hit their bottom. And that's been in the midst of the Fed continuing to raise rates, perhaps higher than many people thought, and continuing on with those hikes. Yet here we are, still not too far off from that $2,000 level, which I find a bit impressive. And just curious, any thoughts you have in terms of the pricing of where gold stands today, and perhaps if you have any opinions on where you think things might be headed, given the dynamics going on out there.
Yeah, look, like yourself, I think gold has held up very well. You know, we've had the raising of the US Fed interest rates, the highest rates over since many, many years. And gold has typically been an inverse relationship to that, but gold has held up very well over the last year to 18 months during those Fed raises. You know, as a guy who background in operations and development, a lot of gold miners are making a lot of money today at 1900 gold, close to 2000. So I know there's a lot of focus on gold and the gold market, but I think it's holding up quite well given the macroeconomics that are going on in the background around the Fed raising interest rates. So yeah, we're pretty excited about it. And I do feel that as the Fed is coming close to the end of the raising of rates, we believe, and I think a lot of people believe, that gold will come back under focus and have a bit of a growth story and a bit of a spurt as we go on. You know, there's been so much liquidity put into the market, and there's been a big focus on, you know, on the spend and inflation. And I think at some stage the Fed is going to have to pivot, and I see that as a big opportunity for the gold market to do a little bit of a run. So yeah, I'm quite optimistic about the future of gold, and you know that's why we started to put this company together on timing. I think the timing is perfect.
Yeah, I agree with what you're saying there. And you mentioned whether they do pivot at some point, and perhaps what stood out to me the most from some of these Fed press conferences is that in their own economic projections, they talk about rates being about a full point lower in 2024, another full point lower in 2023. So you wonder if gold is hung in close to $2,000 while they're hiking. It is interesting to imagine what happens when they start cutting. And obviously a lot of reasons, whether it's recession fears or even just as you're probably well aware, here in the US, we have a large debt load with an interest expense growing. It seems like that, even aside from the Fed talking about in their projections, that almost has to happen eventually.
Yeah, I think so. There's a lot of talk, as you know, on the macro side about something breaking. You know, interest rates have rose very, very quickly over the last year, and there's always a lag to this. You know, mortgage holders, the big commercial banks. You know, it'll take some time for that to flow through to the market, I believe. And some of them must be beginning to suffer with those interest rates popping up. And I believe it's only a matter of time. We've had that earlier in the year where some of the regional banks in the US had those issues. And you know, there's a lot of talk that there's a lot more out there that potentially will happen to. It's just a matter of time. And I think when that starts to happen, there'll be a bit of a cascade effect. And that's where I think the Fed will start to use language around stopping raises, maybe potentially pivoting. I think that's the opportunity for gold, I believe, to do a bit of a run. And silver, gold and silver, the precious metals.
Yeah, and you mentioned that we did have those issues earlier with the banks, and I personally don't think that we've seen the end of that. And it was interesting, the response. Gold and silver had been declining a little bit from highs earlier this year, and you saw, especially on, I mean, certainly in the futures market as well, but especially a lot of people seeming really concerned and buying physical metal, which was quite noticeable. And certainly if we do see a return of that, especially with a lot of commercial real estate debt set to get turnover, we will see how that goes. Though another thing that has been interesting that we've seen throughout the past year, this has been new, where now we get even the mainstream banks talking about higher forecasts for gold. Here was JP Morgan earlier this week. Maybe their report came out last week, but they were talking about higher gold prices towards the end of this year, and a higher price going into 2024. Similar, we had a report from Citigroup raising their 2024 gold price target. So it seems like it's not just the gold and silver bugs anymore, that now there's a wider realization that, hey, this might not be another brief spike.
Yeah, no, and I also think to point out that even though the gold was under pressure, all the central banks of the world were buying a lot of gold. You know, there was over the last year, there's been a lot of purchases from central banks of gold, building up the gold. So, you know, it's as if people know what's coming and they're beginning to get ready. As you say, the market is slightly turning. The big banks are coming out. The central banks are buying a lot. So I think it's only a matter of time before that pitters down to the next level, which is the retail level and the investment banks, etc., coming back into the market. And as we said, gold has held up very well over the year. So it won't take a lot of, new money into gold to drive that gold price.
Yeah, and that's actually one of the other questions I wanted to run by you. Again, I mentioned we talk about silver a lot, where certainly mainstream money has not been flowing back in. I would say even on the mining side, a lot of people still feeling burned after what's happened in the past 20 years with, especially on the junior side, companies' share prices being down a bit. Have you seen much difference on the gold side? Are people starting to come back in there yet, or still a bit cautious?
Yeah, still a bit cautious. Small little bit of money is beginning to come back in. I think it's the early adopters, as we say, beginning to come back in. Up to now, there has been a bit of a muted response, but it's just starting. I can see it just beginning to start now as more and more of the big banks come out with the new forecasts, and there's talks beginning to be of recession next year, et cetera, et cetera. We are starting to see a little bit of money flow back into gold. And historically, Rick Rule also says this a little bit, that the portfolio allocation of most people was historically around 5%, and it's gone down very, very low now. And if it even reverts to mean, there'll be a huge amount of flow back into the precious metal space, and that will drive silver and gold stocks, I believe, very, very high over the next number of years, for sure.
Yeah, and it's interesting how you phrase that, because I guess there's a degree to which a lot of the people in the gold and silver space aren't always the biggest fans of some of the Wall Street banks, yet when they do start issuing those reports, I mean, that goes through to the institutions, a lot of high net worth people, and you would think that actually does have quite an impact as that starts getting picked up more on the banking level.
Yes, no, it will. And the gold market is relatively small in relation to for the institutions. So when they start to allocate some money into that, it's like a funnel, basically. There's a huge amount of money going into a smaller market, and that does drive, and they go into the stocks, a lot of them physical metal, but where they get the leverage is into the gold miners and the silver miners, and that's where I think you'll get a lot of leverage. If you look back at the 2000s when it started to move again, you got a huge upside in those stocks, a lot of those stocks. And I think we're about to see that happen again into the end of this year and into next year.
Well, I think a lot of people are obviously looking forward to that. And again, one of the other things I wanted to ask you on the mining side, obviously one of the issues last year, we finally got the inflation. We finally saw the resulting price increases from that inflation of the money supply, which has obviously made its impact on the mining sector, where very capital intensive business, very energy intensive. I see here from this was from the World Gold Council. They're showing $1,276 all-in sustaining cost. I hear numbers that from various analysts that are generally higher than that. Curious, based on what you see out there, what is it costing to actually produce an ounce of gold for some of the bigger companies these days?
Yeah, look, the quarterly results were out for most of the big miners over the last couple of months. They got into Q2, and we do a good bit of analysis on that and understand it, and they are getting up. It's definitely a 1,100 to 1,200 sort of range is what we're seeing at the moment as an all-in sustaining cost. Obviously the bigger miners with the grade it makes a big difference. High grade operations have a lower cost because it's spread over the amount of ounces. But yeah, we're seeing around 1,200 sort of range as an AISC. But I think that's more of a relation to the amount of inflation we've seen generated over the last number of years. As that inflation begins to tick down over the next number of years, as the Fed are pushing it, I do see those costs come back down more into line with historical, which is around $1,000 an ounce, really. There is a peak in the last 12 months of prices. We had supply chain issues, we had COVID, we had a lot of increases in the market, and I do see that beginning to taper off now. And obviously if we do go down to that area and it begins to ease off a little bit, we will see those costs come down for sure.
Okay. And another thing that we talked about before we hit the record button was that obviously over time, a lot of the easy higher grade deposits are found and we're seeing lower grades. Curious, I don't know if it's a matter of hitting peak gold yet, but how much of the easier targets are out there going forward? Is that we reached the point where most of the things that are higher grade and easy to find have been depleted, or what do you see in terms of the pipeline going forward?
Yeah, look, there's a lot of districts in the world where high grade deposits are still to be found, or historically where high grades have been. And for our company moving forward, obviously we're in the Red Lake district of Canada. Historically, it's had very, very high grade deposits. And so that's where we focused on, because that's the biggest bang for getting your higher grade deposit. But across the world, yeah, grades are falling. And there's a lot of competition in the industry for people, labor, etc. And so, yeah, we do see opportunities there, but you've got to focus on the high grade camps, as we call them, to get those big numbers on grade.
Yeah, and another thing you just touched on there and had mentioned earlier was that it is getting harder to find the people to do the mining, the different skill sets that are involved in that, especially with a lot of people in the mining sector getting older. And perhaps you could touch on that a bit.
Yeah. I mean, look, the mining industry over the last number of years, a lot of the senior leaders and a lot of the people who've built and operated these mines over many, many years, a lot of them are getting older. They're the baby boomers as we know it today, and they're beginning to retire from the industry. And typically a lot of people say it takes 10 to 15 years to put an operation and a mine into production. And so that group of leaders and people with experience are not going to be there for the next wave. There's a lot of push around the world on critical metals and gold and silver moving forward. And I believe that having the team and the core team that you can get that have experience and have done this and are still reasonable mid-career level people who can bring these mines forward for the next 10 years and build companies on that. And that's very important as we build our company out, to make sure we have a good mix of young, energetic people with experience, and then the older, experienced people who can guide and help and support that as we move forward. I see that as a real issue going forward for the industry, the mining industry, as we go forward, Chris.
Yeah, it's certainly something to keep an eye on, especially in business that is not overall the easiest thing to do. Of course, then there's the whole permitting issue and just a lot of challenges. And as I mentioned to you earlier, it's recently seen my first gold mine in person and just seeing all the steps that go into that. So certainly, again, impressive the background that you have in being involved with so many of these different projects. And Shane, perhaps you could give us an update of how things are coming along. You joined West Red Lake Gold just about 2 months ago now, I guess it was. And perhaps you could give people an overview of what you've been doing there and what you're moving forward.
Yeah. So just early in the job, getting my feet under the ground, basically, getting going. But West Red Lake is really a company that we recently did a large an asset purchase, basically out of the CCA process, which is the Madsen mine in Red Lake. This was owned by original operator was Pure Gold. They obviously had a lot of issues going there, and it went into the bankruptcy process. We managed to secure the assets. Basically, this operation has had around $350 million of capital spent on this project over a number of years. We've managed to do a fantastic deal where we bought it for $6 million and some royalty to Sprott, plus some contingent payment. So really, we ended up buying this for pennies on the dollar, really, when you look at the value. And our plan is to move this forward. We're going to take some time, understand the project, do a lot of some drilling and some development, really de-risk the project before we even think about restarting the project. So the next 18 months will be around more definition drilling, doing some development, getting ourselves really set up for the production restart. We haven't, down the road, whenever that is, it might be 18 months, it might be 24 months, but we're really going to take our time to understand the project. And we've also done a lot of work on understanding the previous operator and some of the lessons learned from that. And as we move that forward, move the project forward, really.
Yeah, and Shane, you also had some drill results out this morning from the Rowan Project, and perhaps you could give people an overview of that mine and how things are coming along there.
Yeah, historically, before we ended up doing the Madsen deal, West Red Lake had the Rowan property, and the Rowan property is on the other side of the lake, on Red Lake. It's an exploration project, an historic mine. There was historic mines in that region, but it's very exciting because our team have just got into it. And started to drill that this year. We've done about 17,000 meters of drilling. We're increasing that to 25,000 meters. And again, typical Red Lake, very, very high grade and some decent widths on that. So we see this as a potential satellite deposit. Now that we've secured Madsen and the mill, we have a mill in place, and we were able to secure this as a feed for that Madsen mill. So a satellite kind of a hub and spoke system where this would be a feed in to fill the mill in Madsen. So we're excited about this. And as you can see, some very, very high grades over some very decent mineable widths in there. And these systems tend to, in Red Lake, as they go deeper and deeper, they begin to get higher grade. And we're seeing that in some of the results we're seeing. It's still early. We still have a lot of drilling to do, but we're very excited about this property as an addition property and a feed for Madsen Mill.
Yeah, I can imagine you were happy to get some of these drill results back, and certainly some positive news you had there. And Shane, perhaps in wrapping up, obviously you have some drilling that's ongoing. Anything else in terms of the next few months that people should be looking out for, or any milestones or notes or anything else you'd like to share about the project?
Yeah, over the next few months, the focus will be obviously drilling on Rowan. I expect to get a lot of good results like that out of Rowan. We are seeing, as we go deeper and drill in that's going to drive a lot of news flow over the next number of years. We have one drill working there. And we're also really beginning to get into the Madsen mine. We haven't, the deal only closed in early June, so we're just getting in there. We're going to start drilling in there. Some extension drilling, and really that is a very high grade deposit. So I do see a lot of exciting news coming out of that as we get in and drive the value of that project to really understand it. We are going to go back in and do some development and some underground drilling. So that would be some key catalysts coming over the next number of months.
Well, it sounds like you've come along just at the right time. Obviously, you have an impressive background, and it was nice to be introduced to you from my dear friend Sean Kunkun, who's running Dolly Varden and certainly has done some impressive things there as well. And glad to see that you're in a good role where you're going to be able to use your skill set. And perhaps just could you let folks know the website address if they'd like to find out more and stay in touch with what you're doing?
Yeah. So it's westredlakegold.com, and we've just updated the website. Actually, we're doing a bit of work on the website. I came in and there's a bit of rebranding to be done, obviously, taking over the assets. So it's westredlakegold.com. We're also on the TSXV, and we're on the OTC as well. So there's WRLG and WRLGF are two ticker symbols.
Well, Shane, I appreciate that. Appreciate you making some time to check in and talk about the gold market and give us a better idea of how things are coming along on the mining side and some of the challenges that are out there for the miners and how things are stacking up right now. So congratulations again on the new role, and we'll look forward to following your success.
Excellent. Thank you very much, Chris. And looking forward to where this will go, definitely. As I said, this has been an exciting story, and I do feel that your listeners should be very interested in following us as we go forward.
Well, appreciate you giving us a rundown, and we'll have the link to the website in the description field below, and look forward to see how things progress in the next couple months.
Excellent. Thank you very much, Chris. Thank you. Great to be on. Thank you.